Welcome to the deep dive. Wow, there's a real buzz this week, isn't there? Bitcoin's right up there again, pushing against its all-time high. It really does feel like we're watching something, well, pretty significant unfolding. I'm keen to get into what's actually driving this. So today, yeah, we're doing a full plunge. We've pulled together the latest market numbers, some quite surprising institutional stuff, and big macro signals, all things shaping Bitcoin's path right now. We're going to try and connect these dots for you.
Absolutely. And our goal here really is to pull out those key insights from everything that's been happening recently. We want to help you understand not just what's going on, but, the why behind it and what it means for Bitcoin as it, matures. So let's dive in.
Okay, straight into the numbers then. Because Bitcoin, it's showing some serious underlying strength. This morning, trading strongly around $120,000. It even hit $122,321 intraday. That's a solid 3.4% jump in a day. And listen to this. The old all-time high was $123,231.07. I mean, we are incredibly close to a new record. What makes this surge feel maybe different?
Well, what's really interesting is how fast it climbed. And it's not just, retail excitement driving it. It really shows strong buying pressure. And a big part of that boost came from short liquidations. Basically, traders betting the price would fall get squeezed out when it rises, forcing them to buy back fast. It adds fuel to the fire. That, plus a really big shift in market mood over the last, say, 48 hours, has created this strong upward push. It feels more grounded this time.
Right, more than just hype. And it's not only Bitcoin, is it? Looking wider, Bitcoin's market cap is huge, around $2.41, $2.42 trillion. Dominance holding steady at about 60.9% of the whole crypto market. But it's part of a bigger picture. The total crypto market cap rose 2.3% to $4.06 trillion. And Ethereum, ETH, climbed 2.2% to $4,307. That's its highest since December. Does this broader strength, suggest a healthier ecosystem than maybe in past rallies?
Oh, absolutely. Connecting this broader strength, it's a clear sign of overall investor confidence, yes, but more than that. It shows a willingness to diversify within digital assets. When capital flows beyond just Bitcoin into majors like Ethereum, it points to a healthier, more resilient crypto landscape. It's not all riding on one horse, which suggests more stability, more sustained interest. It feels less like a single hot trend and more like, a maturing asset class overall.
That makes a lot of sense. So what's the feeling out there? Kraken and the exchange, they report 76% of investors are feeling confident, 76%. And it's backed up by strong inflows into crypto funds and robust on-chain activity. Now, thinking back, past surges often felt like pure retail mania. What makes this wave, especially with institutional money, fundamentally different? How do we know it's not just another bubble?
That's the crucial question, isn't it? This influx of institutional capital, it provides a much more, let's say, stable foundation for Bitcoin's price. It's different from pure retail speculation because institutional money usually has a longer-term view and, importantly, involves a lot more due diligence. It signals the asset class is really growing up, gaining acceptance in traditional finance circles. It's a vote of confidence from the big players. They're looking more at the fundamentals, not just quick flips. It's like the asset's risk profile is being reevaluated, moving it beyond just a niche speculation.
Okay, let's unpack that with some specific examples, some news stories that really show this institutional and even governmental embrace. Like El Salvador, they've just brought in a new investment banking law. It lets licensed banks there actually hold Bitcoin and offer crypto services. What's the knock-on effect of that?
Well, what's really significant there is El Salvador is already, the pioneer with Bitcoin as legal tender. Now they're creating what could be a replicable legal and financial model. It's not just about retail use anymore. It provides a concrete, regulated way for institutions, maybe even other countries, to integrate Bitcoin directly. It basically shows them how to bridge crypto and traditional banking, a potential blueprint.
Okay, and here's where it gets really wild. BlackRock's Bitcoin ETF, IBT, it's just blown past $86 billion in assets under management. AUM. I mean, $86 billion. That's bigger than almost any other ETF out there. What does that sheer scale tell us about Bitcoin's place now?
That scale, it's more than just validation. It fundamentally changes how traditional finance views Bitcoin's risk. Think of it as like institutional de-risking. Making Bitcoin easily accessible through a familiar, regulated thing like an ETF, it broadens the appeal massively. You start getting capital from pension funds, endowments, wealth managers, folks who couldn't easily touch crypto before because of rules or just how to do it. So it's not just demand. It's a fundamental shift in accessibility and perceived safety. It's truly integrating Bitcoin into mainstream portfolios.
And it's not only the ETFs making it accessible. We're seeing this clear trend of companies putting Bitcoin on their balance sheets, Metaplanet, a Japanese public company, just bought another 463 BTC. They now hold over 17,500 BTC. And they openly say they're inspired by strategy, formerly MicroStrategy. Speaking of strategy, they just picked up another 155 BTC, their total. A staggering 628,946 BTC. That's worth $76 billion, nearly 3% of all Bitcoin. What's really driving this sort of corporate Bitcoin standard, and how big a deal is it for Bitcoin supply?
It's a really burgeoning trend. It signals deep corporate confidence in Bitcoin, not just as an investment, but as a long-term store of value, a hedge against inflation. Companies are usually quite conservative with their treasury. They're not just gambling here. It's a strategic move to protect capital from currency debasement. It's a fundamental shift in balance sheet management, really. And with strategy holding almost 3%, yeah, you could see a kind of cascading effect. More companies soaking up Bitcoin supply from the market. That could create a real persistent supply squeeze over time.
Wow.
And even traditional safe haven players are joining in. ECR Minerals, a UK-based gold mining company, has adopted a Bitcoin treasury strategy, a gold miner buying Bitcoin. That feels significant, doesn't it? Like old world meets new world. Is this a sign of things to come or just a one-off?
It is significant, and I'd say it's much more than just symbolic, coming from a gold miner. It validates that digital gold narrative even further. It suggests even producers of traditional safe havens see Bitcoin's potential, maybe even superiority, as a store of value now. They're acknowledging its unique advantages. It might take time, but it definitely chips away at the old thinking. Could encourage other commodity firms, other traditional businesses maybe.
And the government interest keeps ticking up too. Brazilian lawmakers, they're apparently set to discuss a strategic Bitcoin reserve bill. We talked about El Salvador, but Brazil is a huge economy. If they were to integrate Bitcoin into national reserves, how could that shift things globally?
All right, it connects to El Salvador's move, but Brazil is, well, a much bigger stage. It shows growing interest among sovereign states in Bitcoin as a reserve asset. If a major economy like Brazil actually did that, it would give Bitcoin a massive legitimacy boost globally. It starts to change the very definition of a national reserve, doesn't it? Beyond just gold and foreign currencies, it's a big step towards deeper integration into the global financial system. Could definitely inspire other nations.
And on the investment management side, Parataxis, a Bitcoin asset manager, plans to go public through a SPAC merger. They're aiming to raise up to $640 million, and a good chunk of that is specifically for buying Bitcoin. What does a move like that signal?
That's a strong sign of increasing maturity and institutionalization within the Bitcoin investment world itself. Going public means more transparency, more regulation, easier access for more investors, not just private funds. And raising that much money specifically for Bitcoin purchases, it just underlines the growing financial plumbing being built around Bitcoin. It means more regulated ways for big money to come in, further professionalizing the whole space.
Okay, let's shift to market dynamics. There's this growing debate, isn't there, about whether Bitcoin's old 4-year halving cycle, the thing that cuts new supply and often kicked off bull runs, is it losing its punch as the main price driver? What's your perspective? Are things changing fundamentally?
It's a really relevant debate, and I think, yes, its influence is certainly becoming less dominant, or maybe diluted is a better word. Historically, the halving was the major supply shock. But now, with huge institutional holdings, corporate treasuries locking up supply, massive ETFs, the sheer scale of demand and locked-up Bitcoin from these new sources is starting to overshadow the halving's impact on new supply. If this keeps up, Bitcoin's price might start behaving more like traditional assets driven by macro trends and institutional flows, not just its internal code, which could mean, maybe, less crazy volatility but more sustained growth. Investors definitely need to broaden their analysis beyond just crypto stuff now.
Right, beyond just the crypto native factors. And speaking of macro, we've got major U.S. economic reports and Fed speeches this week, Tuesday to Friday. Key inflation data, CPI, PPI jobless claims, Fed speakers. How do these traditional economic things play into Bitcoin's current run?
Oh, they're hugely important because they directly sway investor appetite for what they call risk-on assets, and Bitcoin often falls into that category. Right now, there's this expectation or hope maybe of a dovish shift from the Fed. There's about a 41% chance priced in for a rate cut in September. That kind of environment, lower interest rates, tends to be good for assets like Bitcoin. Makes holding cash less attractive, pushes money into riskier things. But if inflation stays high or the Fed sounds more aggressive, hawkish, that could definitely put the brakes on Bitcoin. So yeah, these reports are critical for sentiment.
Okay, let's zoom in on the technicals for a moment. Bitcoin's holding above its 4-hour EMA, that's the exponential moving average, around $119,737. And momentum indicators like the MACD are hinting at a bullish crossover. Technically speaking, what are the key levels traders are watching?
Looking at the charts, yeah, the key resistance is right up there at $123,000, that old all-time high. Then maybe $128,000 beyond that. On the downside, critical support seems to be around $116,200, and also that important psychological level of $120,000. If it were to drop below $120,000 consistently, it might fall back into that $116,000 to $120,000 range we saw before this latest leg up. Suggests consolidation.
You mentioned consolidation. What about that gap people talk about, the one in the CME Group's Bitcoin futures, between roughly $117,000 and $119,000? What does that gap usually mean for price in the short term? How do traders look at that?
Ah, yes, the CME gap. It's something traders watch closely. There's this tendency, often observed, for the price to eventually revisit and fill that gap. So it suggests there might be a potential short-term pullback to that 117K, 119K zone before the price potentially continues higher. For active traders, it might signal a short-term shorting opportunity or maybe a level to look for buying on a dip, even if they're bullish overall. It's a common pattern, a reset, sort of.
Okay, now, a bit of a reality check. We hear some ambitious targets, right? Options traders eyeing $200,000 by year end. But the market data, apparently, puts the probability of that at less than 3%. How vital is it to separate the hype from the data, especially for listeners maybe newer to this?
It is absolutely vital. You have to distinguish between the excitement, the speculative enthusiasm, and what the actual data suggests is probable. Look, the bullish feeling is understandable. It's part of Bitcoin's story. But making big bets, especially leveraged ones, on very low probability outcomes, that's high risk. For you, the listener, it means grounding your expectations in realistic analysis. Look at the data, not just the exciting headlines or predictions. Good risk management is key. It helps manage your money and, honestly, your emotions, too.
Yeah, good point. And on a much more serious, frankly chilling note, there are reports of a rise in kidnappings targeting Bitcoin holders, often linked to data leaks, apparently. It's a stark reminder of the real-world dangers that can come with digital wealth. What kind of security should people be thinking about beyond just, their digital wallets?
It's a deeply concerning issue, and it really highlights how crucial robust personal security and privacy measures are now. It goes way beyond just cybersecurity. Especially if you hold a significant amount, comprehensive security, including physical safety awareness, is just as vital as protecting your digital keys. It means being really careful about your digital footprint, what you share online, who you talk to about your holdings, even subtle things, protecting your whole attack surface, not just your passwords or seed phrase.
Okay. So pulling this all together, what are the key takeaways for you, our listeners, from this deep dive? First, it seems clear. Sustained institutional momentum. Bitcoin's getting deeper buy-in from big finance. It's validating it as a real asset class. This feels structural.
Second, definitely evolving market dynamics. Bitcoin's price is being driven more and more by institutional money and macro factors, not just those old crypto cycles like the halving. So you need a broader view now.
Third, watch those macroeconomic tailwinds. Keep a very close eye on U.S. economic data, Fed statements. A dovish Fed is generally good for Bitcoin. These reports really matter.
Fourth, and this is critical, vigilance on security. Physical security is now just as important as digital security for anyone holding Bitcoin. Be aware, be private.
And finally, maintain a balanced outlook on price targets. Yes, sentiment is bullish, we see crazy targets, but ground your own expectations in data, not just hype.
Wow, what an incredibly packed, deep dive into Bitcoin today. It's really clear it's not just, a digital coin anymore. It's a complex, fast-maturing financial instrument, isn't it? Pulled between its crypto roots and the big global financial system. It's quite something to watch.
It really is. And while the short-term charts might suggest a pause, a bit of consolidation, the convergence of all these powerful fundamental forces, the institutional adoption, the corporate buying, the sovereign interest, it really does point towards a sustained bullish case for Bitcoin. It's genuinely transforming its role in global finance. It's becoming, you could argue, foundational.
Well, we really hope this deep dive has helped give you a clearer picture of where Bitcoin is on its journey and maybe what's coming next.
And maybe a final thought for you to chew on. Think about how this increasing integration of Bitcoin into traditional finance, into government structures, how might that actually redefine what we mean by digital gold? Is it just a store of value? Or could it become a core part of future economic policy, maybe even national financial strategy? The whole idea of money seems to be quietly evolving right under our noses.